Becky Quick is here, and she is speaking exclusively to Bank of America CEO Brian Moynihan about all of that. Becky, welcome.
Thank you very much, Kelly. And Brian, welcome to you. We've been looking through these numbers. Strong report on just about every metric. You beat on the bottom line. You beat on the top line. As Kelly mentioned, net interest income up by about 10%. Same story if you were looking at sales and trading. In fact, this morning we had Stephanie Link on. She's a shareholder who said she thought the shares should be trading a lot higher based on this. Are you surprised by the street's reaction today?
Thank you, Becky, and thank you for recognizing the great work our team did during 2025. Our expectations were to have high teens EPS growth from the fourth quarter last year, the fourth quarter this year, and we got 19% with good credit. The NII growth, as your colleague said, 10%. So it was a very good quarter and a very good year, $30 billion in earnings. And look, if you look, the vicissitudes of being a public company, sometimes when you think the stock will go up, as Stephanie said this morning, it doesn't. Sometimes it does when you expect it to go down. But if you think about it, year to date, the biggest banks are, the big money center banks, multi-line banks are all 5%, 6% down. So people shifted, and it'll come back. Last year we had a little bit of this, and we ended up 25, 28% up for the year, hit an all-time high as we came into the end of the year. So we feel good about our company. We feel good about our prospects, and my team has done a great job delivering it, and we'll do it again this quarter.
You did make some comments today just about the broader economy, how the consumer has really hung in there. Business has really hung in there as well. So it looks great from the broader economy, and you think that means that you're going to be looking at a lot more growth for the rest of this year. Can you maybe dig down a little deeper on that, on what that means specifically?
So for the fourth quarter of 25 versus 24, loans grew 8%, deposits grew around 3%. That is good core growth. And look, what we see in the consumer is for the year 2025, the Bank of America consumer base, who moved $4.5 trillion into the U.S. economy, moved 5% more in 25 for the year than they did in 24. And the fourth quarter was in line with that. As we see the first few weeks of January, it's picked up a little bit, it's around a little over 5%. That sets you up pretty well, because if consumers are spending, they're employed, they're spending, and we can see in the data their wages are growing, which is some of the discussion our colleagues are having about inflation and wage growth. That's all bodes well, because in the end of the day, they'll spend, and that helps companies make money. If you talk to our small business customers, they remain optimistic. Last year was a tricky year for small and mid-sized businesses. Liberation Day, trying to figure out what that meant to it. Was tax going to get through? It got through. So with the certainty around tax, the certainty around tariff policy settling in, and then now the deregulation or benefit, they are feeling optimistic. So our team in research has us at 2.6% growth for the GDP for 2026, and that sets up to be a pretty good year for Bank of America and our industry generally.
Brian, let's talk about some of the broader issues that are impacting the bank stocks today, because, again, I didn't see any weakness in any of the numbers that you showed. It was strong performance across the board, better than most of the other big banks. But if you're looking at most of the big banks today, they're down 4 to 5%. In part, that is because of some headlines that are coming out of Washington. The president raised this idea of a cap on credit card interest rates that you and other banks could charge consumers, capping that at 10%, which I know is less than half of the industry average right now. We have heard from some other CEOs who have spoken out against that. What do you think about this idea on a cap? What would it mean for Bank of America?
Well, this issue is not new. It's been proposed many times in Congress as a series of bills. And the point we make, and we make as a company and as an industry, is if you cap the rate we can charge, then we have to pull the credit back dramatically, because we can't have any charge-offs, frankly. And so we have a 3% charge-off rate in this business, 3.5%. If you start to pull that back, so credit availability will shrink. And we're all for affordability. Becky, as you and I have talked across the years, how we consumer fees and what we did in overdraft fees. We have a $500 loan availability that you pay $5 for, no interest rate, that you pay back over 4 installments and things like that. We have a lot of things we've done on affordability, and we continue to push that in fairness of fees and structures. But if outright cap will move credit away from people who deserve it most and potentially move them back into payday lenders and things like that. And so that policy debate has to be had among the policymakers. And in the end of the day, I think the unintended consequences, so-called, that economists would call it, are on the table. People know them, and we're making it clear from our trade groups. You saw strong statements from our various industry participants. And we think, we're all for affordability, but let us think of ways we can help, not necessarily taking away credit from people who deserve it.
What credit rating would you have to qualify for a credit card if that interest rate was capped at 10%?
you'd have to be well into the 700s, which, if you think about the array of the population, moves you to a very small portion of the population. So the people outside that range will want credit. How they'll get credit is to go to people outside the regulated industry, quite frankly, or use non-credit card facilities to get to that credit. And so, look, we think that the industry has all kinds of participants. It's robust competition. We have a no-frills credit card today, no rewards, none of that. And the rates are lower than other things. And, customers can choose that, and they do. But the idea of leaving it to customer choice, we think, is a good policy.